Now, the best protection against inflation is your own earning power. If you're the best teacher, if you're the best surgeon, if you're the best lawyer, whatever it may be, you will command a given part of other people's production of goods and services, no matter what the currency is. The second best protection is a wonderful business. If you own the Coca-Cola trademark company, you will get a given portion of people's labor 20 years from now and 50 years from now for your product, and it doesn't make any difference what's happened to the price, because people will give up 3 minutes of labor, 5, whatever it may be, to enjoy, 12 ounces of a product they like. So those are the great assets: your own earning power first, and then the earning power of a wonderful business that does not require heavy capital investment. If it requires heavy capital investment, you get killed in inflation.
By and large, we have businesses that will do pretty well in inflation, but inflation destroys value, but it destroys it very unequally. The best business to have during inflation is one that retains its earning power in real dollars without commensurate investment to, in effect, fund the inflation produced nominal growth. The worst kind of business is where you have to keep putting more and more money in to a lousy business. In effect, the airlines have been hurt by inflation over the last 40 years, because now they have to put a whole lot of money in a lousy investment, which is a plane, compared to 30 or 40 years ago, and they have to stay in the game. They have to keep buying new planes, and the new planes cost far more now, and the returns continue to be inadequate. So the best protection is a very good business that does not require big capital investment. Charlie and I are always suspicious that inflation will regain some of the momentum it had a couple of decades ago. We always think it's in sort of remission. We thought the talk about deflation was total nonsense. And certainly the trade picture is one that you would think would accentuate any inflationary trends that might otherwise be experienced. I mean, obviously, the inflation is always a factor in calculating the kind of investment, kind of business that we want to buy.
So far, the facts that are driving the dollar down in relation to other currencies have been restraining inflation in the United States. In other words, it's the competitive export advantages of the other people that have so far restrained inflation here. So it's
Yeah, you're paying less for shoes. We got killed in parts of our shoe business, and 30 years ago, of the billion plus pairs of shoes used in the United States, a very high percentage were made here, and now virtually none are. But if they were all being made here, you would be paying more for shoes. There's no question about that.